Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix.
Marco, how are you?
Good. How are you? I'm excited to see what's going to happen in an hour or so.
Yeah. Well, hopefully you make it out alive. I would say I think a lot of people are just watching here. Hopefully they're just watching. And people setting up, and I see a lot of on the spies puts and calls. I guess we can talk about it a little bit. Powell's statement, I think today is big. My gut is telling me, just to be out there, my gut is telling me that he doesn't say much. I think that, I've been swayed a little bit by B of A analyst. I read an article yesterday that sort of outlined different perspectives. And it goes back to my original thought, which was inflation. The inflation that the government is really worried about is the inflation that's generated from the economy actually heating up, like jobs and production and retail stores selling and things. Just that's the inflation. There's inflation where it's just prices are going up, and then there's inflation where the economy is humming along. And I think it was interesting what the B of A analyst said. He spoke about what happens after this initial let's get back open, let's get back to some normality. And if 6 months from now there's not enough jobs, or we believe, or we're meant to believe, that every company is going to open everything up again and jobs are going to be the same like they were before. And I'm not convinced that that's going to happen. In fact, I actually think that many large companies have gotten leaner. They don't plan on bringing anybody else back. They are much more willing to spend money on artificial intelligence, technology. So what happens to all those jobs? And I get the whole clean air is going to develop 150,000, 300,000 jobs, whatever it is, but it's a certain skill set. Unless you're just going to take the guy who's working at JP Morgan in the middle office and he no longer has a job, and he's going to say, okay, he's going to move the family to Idaho or wherever they're going to build these wind farms. I'm not sure that's going to happen either. So there's this disconnect with reality. These types of jobs are going to be in places where people are not really located right now. And then there's been this lean cutting. So, the government, I think, is worried. When they say inflation, I think they're worried about an overheating economy and jobs, which was my initial thought. Yes, they're worried about food pricing and whatnot, but the inflation that we're seeing might just be that people are scared about the US dollar and scared of owning bonds, which we've sort of seen because the bond market's been getting killed. So people are scared of owning the treasury market, the bonds, US dollars. And so instead of buying that, they go buy copper and silver and gold and commodities, oil, so China's out there pushing, they've been literally hoarding any commodity they can over the course of the last, call it 8 months. So that is not healthy inflation that the Fed is sort of worried about, saying, oh my gosh, everybody's got a job, everybody's got this income, and everybody's making money, and prices are going up because the United States is humming along. Japan and Europe, they've reduced interest rates for a long time. They see no inflation. They're seeing zero, right? So that should tell you something, that they're seeing very little. I guess they're starting to see now, but for years, Japan did this zero interest rate for many, many years, and it didn't work. So I suspect that the Fed is worried and concerned about what I would call the inflation generated by an economy that's humming along. And they think that this may be a little bit of a pop and fizzle over the next 6 months that, okay, we get back to open. Yes, that people are starting to come back in, but it's not really going to be the normal that we saw it. And I don't think that they want to move too quickly or to commit too quickly to this. Yeah, we're going to raise rates in 2023. So the market is sort of pricing in the bond market, and is sort of pricing in this Fed's going to move a little bit earlier than they did. And there's a lot of talk about inflation, but inflation, when I look out the window, inflation is everybody's got jobs and everybody's humming along. And I just don't see that. I see unemployment. I see middle America hurting, everyone low income hurting. It's really tough out there. So these are, I mean, I'm just going to say that I don't think he does much. Unfortunately, I think the bond market gets hit, and the bond market, there's no lift in the bond market. It's like someone knows, right? Someone knows that the bond market's going to get hit. There's no lift. It's just nobody still wants to own it. And what they're doing is, what it appears that they're doing is that they're pressing Jerome Powell, and they're pushing the bond market lower and saying, we're not going to buy this market unless you give us the signal that you're buying, right? When you give us the signal that you're buying, you're going to protect it, and you're going to do this Operation Twist. Okay, then, we can figure something out. But until then, we're going to keep shortening. And so so what does that mean for the market? So for the equities, for S&P and the SPY, the one thing I would look at here, if you're playing this game, let's just look at my screen here. I was looking at our favorite name, skills. You look at the SPY, and I'm looking at the front month stuff, and I see there's a lot of positioning going on, right? There's a lot of puts already there. You got 65,000, 93,000, 60,000. This expires in 3 hours. So if they do nothing, I suspect either way, whatever they do, okay, up or down, you might get, there might be this whipsaw that you should be careful about, because it might end up at 95 at the end of the day, but it might literally go to 398 first, and then 392, end up to 395, or it might just do nothing. But my impression is that whichever way it goes, you're going to have to worry about all these people that are set up and that want to get out of these puts, because they're not going to hold them, so they want to get out. And if it goes down to, say, 392, 391, and options are trading, meaning it's likely that people are taking profits and getting out, and the market's not moving higher, that's a sign of weakness. So I'm showing you how to read the intraday using the options flow. It's right now, as you can imagine, people are long puts waiting for potentially a disaster. If the disaster starts to appear, at some point, all these people, 90,000, 60,000, these people will have to sell their options. And in that sell, if the market, so say it gets down to 391, then you just got to believe that not, let's call it 150,000 of these options are going to come for sale. If 150,000 comes for sale, and you're seeing the options trade and 391 holds, then you can imagine that this might take another leg to 389, 388, where then you have 77 here. So it's really, you could take a stab. If I'm day trading this and it trades down to 392 and a half, 391, I am actually, see, I don't know what let's refresh. I know what the prices are, but if I'm day trading the SPYs here and it gets down to 392, 391 and a half, 392, I'm going to take a shot. I'm going to take a shot buying the market for a snapback to 396 even, because as it's the market's evil, right? It's going to move one way. These 395s, they're going to sell 96. This is all going to be for sale. This is going to be for sale, and nobody's going to sell these. They're going to be looking for their profits, and then eventually, right, you sell first. So these sell first generally, and then these are waiting for the 391 print. Then they want to sell, and that's where you get this snapback from 391 to 396 and a half or something like that. Something like that I can imagine easily happening. So you want to be careful of that. You want to be able to, and it goes the opposite way too. If what the first reaction is positive and it starts trading 396, you'll see the 394s, 3s, 2s, 1s, that all will come for sale. And then as it's trading higher, people start taking their profits, and then it snaps back and it goes back down to 391 at the end of the day. So you want to be careful of this is like a prime setup for potential snapback in either way. Okay, that's what I
Right.
would. That's what I'm looking for. Me personally, that's what I'm looking for. Um, the and that's what I would say. I would say as a gut from my gut, a gut look at this. I don't think he says much. I think that we're trading at the highs. He's okay he's okay with us trading at the highs. He sees in his mind, interest rates are we're actually the bond market's lower than we were a week and a half ago, and it's there's like no fear. We're up 6%. So he's in his mind thinking, even if it goes down 1%, it doesn't matter. I don't have to make a decision just because the market's pressuring me. And the bond market is doing its thing and it's pricing whatever it is it's pricing. He also, I mean, this is the Federal Reserve. It's a poker game and he knows what's to come. He knows that there's going to be $300 billion of bonds to buy in the next 2 weeks. Maybe he knows that. And so he says, why do I need to protect it? I know the next 2 weeks, some point in the next 2-3 weeks, it might explode higher and I don't have to do anything. So I don't have to give in. Right? If I'm him, I'm looking at that and I could see positioning and I can look at everybody's books and I could say, I want to know how this person's position is all the 60-40. And I want to know as I'm talking to, he can call up Jamie Dimon and say, what's the answer? How many people or what is being set up for the buy, next week or in the next week and a half. So these are things that he's going to know. And I just don't think he needs to say anything. He didn't say anything when it was actually crashing. The market was doing really poorly. So I'm not sure he's going to, the market wants what it's trying to price in. And I don't think he needs to give it to them right now. It might hurt the bond market for a day, but that's another thing. If the bond market makes he doesn't do anything and the bond market drops, 1-2% on that, I would say that's probably a buying opportunity in the bond market, the TLTs, right when he says that, because I know that there's bond flows coming in. So, I think you can get a snapback there. So these are things that I'm looking at. It's more of probabilities and trading sense. I obviously don't have a clue what he's going to say, but I'm looking for the reaction. I'm looking for the offsides. Everyone, you got to remember when just think about how anybody trades. You trade when it goes your way, you're selling a little bit at a time. The minute it goes the wrong way, everybody just sells everything at one shot, right? So that's how most people do it. So if they're wrong and the market goes up, they will sell their puts so fast. And then they're going to leak out of their calls and then it could snap right back down and then it has a path to go down. So these are things that that I think is something to think about. Now,
Nice.
second point of issue, which is a disaster today. And, we're long to say ABBV. I don't like waking up to any type of news. And it was a disaster, frankly. The stock is down 6%. This is a drug stock. The news was basically the Rinvoq was delayed. It was, they have this Humira drug, basically produces all their money. And these two other drugs were supposed to, over the next 4 years, recoup a lot of those revenues and be the main drugs. They've been approved for Humira to do all these other conditions, to have this drug be the backbone of these other medicines with other conditions. And right now they are, they were told that Rinvoq needed more information. So they were delayed for 3 months. Okay. Delayed for 3 months. A Barron's article comes in this weekend. It's got a decent amount of people in the name over the last 4 weeks. It is a cheap stock if you believe Rinvoq and this other one, Skyrizi, can actually push those revenues up. And you have this, when things open up, Allergen and Botox and the number of drugs that Allergen has in their pipeline. You have a lot going on there. They're just simply trying to reduce the risk of Humira, which is coming off of patent at the end of 2023 with all these other drugs. So the first thing I thought was, what an overreaction, to this. It's 3 months. I get it. It is important for sure. It is important. I think it's an overreaction. It was my first gut check. I also saw that they needed 3 more months. And so, I mean, you told me just before this that you had bought more. You could tell the story.
I did. So I got one position yesterday, just one because patience pays.
So you have patience. Okay, good.
Yes. And I come in this morning, I'm looking, wait, what is this position? This doesn't make any sense. It was 260, now it's 80 cents. Like, what's going on? And then I saw it as a buying option. I was like, look, I can get 4 more for the same price almost. So why not? So I just bought 4 more and I'm actually up now. on it, even though it was down, like 70%. It was down a lot.
Yeah. So
So yeah,
yes. So on that
but
one, I
mhm,
would say, well, first, I would say on that initial morning move, I hate getting stopped out like that. I just,
yeah,
I would actually wait. So I would wait always on something like that. Always. I would just, you're
especially
already
if I
down
bought like 2 or
70%.
3, right?
Yeah,
Yeah.
exactly. If you were patient, for sure, I would still even wait. I wouldn't just jump in.
Mhm.
You did come in and buy some more, which you were able to get a bigger position. But the one thing I would say now is that, and I was telling you this, we see how important it is for ABBV, this drug. It was down $7 at the time, $8. So if in 3 months the FDA says that's fine, we'll let this one go through. And ABBV is a large company, so as long as it's not really hurting people, I think there's a lot of money. I don't know how much money they spend, but there's a lot of money being spent to
Mhm.
give to whatever they need to give to get these things passed. Okay, this is a huge company, a lot of pipeline drugs. As long as it's not really hurting anybody, these things generally pass. Okay, so if in 3 months it does passes, you could expect the same reaction to the upside. If it was down 7 on this delay, up 7 on a pass. So you need to be there when that announcement comes. Okay. And so what I said to you was what I said, you'd probably want to buy the Julys, instead of buying 4 of the Mays, you might want to buy the Julys, and
Yes.
come down a strike because you can. So something to think about. You got back to flat, which I might even say something to say, okay, I would take flat and sort of like relax for a couple of weeks. It's still, I like the story. It's a cheap stock. If these 2 drugs can actually boost the revenues. But July looks like the month that someone is going to come in.
And
And I
did
actually just looked.
and
Go
there is
ahead.
somebody, right?
I actually just looked here. It looks like what happened is somebody came in, and the 110s in May, the 110s in May were rolled out to the July 10. What they did was they rolled out to the July 10, 110, 125. So 6,000 of the 110, and they paid about, let's call it $2 or something like that. So what they did was, the reason, okay, this is a good lesson just in trading, and we talk about it. The reason they do the 110, 125 was because it loses, once a stock does this sort of move down the way it's done today, it allows people to get in at a much cheaper level. And
Mhm.
so it causes the volatility to the upside to calm down, right? It's sort of like, if more people can get in at 104, 105 right here, then at 115, 120, they're going to likely sell some off.
Mhm.
Does that make sense? And
Right.
so I could see that. I could see why they said, all right, let's do the 110, 125, and we can do that at almost $2. Let's call it two. I'm sorry, I think it was 270. Say 275, but it's a 15 point call spread for 275. So that's 12 and a quarter. 12 and a quarter divided by 275 is, let's call it 4.5, right around 4.5, 4.6. So you got 4.6 to 1, almost a 5 to 1 trade. And they're not expecting higher than 125. So that's just something to think about. I know that you bought the Mays, but you might want to consider jumping over into the Julys, because you now want to see the FDA make that announcement in 3 months, good or bad. You want to see that, because if it's good, then all this gets wiped back out and people are back on track with the company. Make
Right.
sense?
Right. Yep.
So
Yep.
that's why the event does matter. The event is something that you look for here to roll. It's a catalyst. The institutional guys are saying, okay, I don't want to be stuck here. We thought that was going to be good, and this next stock was going to be 20. Now we got to wait. And by the way, because we have to wait and more people can get in, we don't expect it to go to 130, 135. It's going to take a little bit longer time. So they still like the stock. They just think it's going to take a little bit longer time. And they want to see the FDA make that announcement in 3 months. Make sense?
Right. Yeah, definitely.
Okay.
Definitely.
Good. So that's that today. That was, I didn't like that news. The other news
Since
that I
we're
guess was
Mhm.
bad was, go ahead. You have something? Go ahead.
I was going to continue in the drug space with Teva, maybe, or you want to do something
TEVA.
else?
Okay. Yeah,
Yeah.
we can go there. TEVA. There was an interesting article yesterday. Okay, so the January's. So it's an interesting article yesterday. Send it to you, and why don't you give them this
Okay.
article?
Yep. Yes.
So I'll talk while you put it up. I'll just TEVA was a name that we spoke about a month and a half ago, 2 months ago, and I think you found it, nice winner, 100%, came back off and then traded poorly on earnings. What he said was, if you go back to the earnings transcript and just remember, we want to take. Yesterday we talked about coming up with our own ideas and how do you do it in the process. Well, we read the transcript. We spoke to he spoke to us about, the CEO of TEVA spoke to us about what his plans were. And what did he say? He said he wants nothing more than to get this whole OxyContin thing behind us. Let's settle, let's get it, let's move on. He said that. He had said that the previous earnings report. Okay. The problem is he also said, and that's why the stock traded off, was what he said: nothing's open. The courts aren't open. There's nothing going on. It's not moving.
Right.
That wasn't good news for the market. The market did not like that. Okay. They want it now. They want to know, we're going to settle or not, or what's going to happen. So the fact that he's telling us that he wants it, but nothing's really transpiring and the stock trades off. We had said that we looked at the January call spread. Someone did this 60,000, 50,000 times, where they bought the 12.17, 5 points. They paid about $1.75. Now today it looks like they're doing it again. It looks like they paid here 20,000 times, $1.19 today. Is that right?
Yes.
$1.19,
Yep.
181. Okay, so $1.19. It looks like they paid for 20,000 more. To me, it makes sense. It makes sense to pay $1.19 to make 381, which is about 3.3 times. That's right. About 3.5, 360. Yeah, 3. I call it 3.2. Let's just say 3.2. Say 3.2 times your money. So I'm gonna pay $1.19. 119 times 3 is 387. So it's about 3 times. Let's call it 3 times.
Okay.
And that looks like a decent trade, for not, as opposed to buying stock, right? Because that's always the trade-off. Do we want to buy stock and hold an $11.46 stock, or do we want to actually buy this 12.17 call spread for $1 and change?
Right.
I think the $1 and change is going to win every time if you show that to a portfolio manager, right? And so this is this development, this news article that you're showing, that you showed, that was the Sacklers, they're the prime suspect here, right? They're the one everybody's going after. They've made an absolute fortune off of selling this drug over the last 25 years, probably did it in the wrong way, bad marketing, and now they're being sued by everyone, okay? And they came up, they offered $3 billion, and now they're up to $4.5 billion. So it's not that the Sacklers are just saying, let's do this. The Sacklers have probably 100 lawyers on this trying to protect them, and by seeing this article come out, by seeing their next offer, you can tell that things are starting to heat up, which is exactly what the CEO said 2 months ago. He said, as soon as things open up, I suspect things will start moving again. So this is music to Wall Street's ears, that, okay, maybe TEVA is going to get behind us. When they do, we could just focus on TEVA. We could focus on this new CEO, what he's doing, taking down debt, and how he's fixing the company. But right now, there's still this element of, we don't know what's going to happen with this OxyContin deal. So the fact that this article came out and the Sacklers put out a bid, or an offer for this settlement, not that they're going to get that price probably, but it's good news that people are talking, that the courts are opening up, people are talking, the lawyers are back to work. Everybody wants to try to settle and get behind this, but they want Sackler's fortune, and the fortune I think it's over $10.5 billion. So 4.5 is not going to cut it. They're going to want more. They're going to want more. Right. By the way, the article also points out how drug use and fentanyl and heroin it's been a disaster, especially over the last 3 to 4 months. It's just been increasing dramatically. China, I mean, that's another thing where I don't know if it's I think it's part of warfare, right? It's all this stuff is coming from China to Mexico right to the United States. It's a way to kill our people and really destroy the fabric of who we are. It's a terrible drug, and this fentanyl is awful. It's awful. It's scary if anyone has kids. So, this is something that, thinking about Teva, they want to get it behind them. I think that call spread is much, much better than owning the stock.
Nice.
Okay.
Nice. Great.
All right.
Awesome.
Good.
I love it. I love it.
What about, go ahead. What'd you see?
No, yeah, you go now. Yep.
I was just going to go bring up CCJ because we talked about it
Ah,
yesterday.
okay.
Okay. And I see that there is activity again in April. Apparently, again, there's an article. Did I send you that article?
I think so. Yep. Let me link it now.
So you can
Uranium
post it,
stock surge
look,
flurry producer. Yep, that's the one.
Look, I don't believe everything that comes out of Zero Hedge. I mean, it's very doom and gloom, but on every day you can find 3 to 5 articles that if you just take the facts, if you just look at it and can take the facts and try to make sense of it yourself, I think they have some great articles there, to be honest. I wouldn't, you read it too much. You need your dose of CNBC because you read Zero too much. You think the world's crashing like tomorrow. So, it's not for direction. It's more for good quality information from different parts of the world explaining what might be happening. This is interesting. Essentially, it's talking about a company that is exercise some options against this other company, Kazan something. Kazam, where is that?
Yeah, here it is.
Kazatomprom. So they were exercising some options, and Kazatomprom needed to buy some uranium. They went into the market. People are in the market buying spot. Who knows the real reason, but this seemed interesting, and I think it's causing people to think, you know what? They're coming after the spot market, which is the commodity market. They're coming after it to increase their supply. And what does that mean for the overall uranium market? So that's the main gist of that article. But I just wanted to give reason to what we were seeing because we had no idea why someone would be buying these ridiculous calls up there, and they were buying a lot of them. So they're still coming after them, thinking that perhaps this could be a squeeze. And that's what I thought today. Okay, they might be playing this squeeze in the uranium spot market, and that would obviously benefit all the other stocks. CCJ is one of the biggest uranium players. That's what I gathered. That's all I know. I think the article is good. It talks also about a couple of names that are going into the TSX next week and trying to boost them up. One's a dollar name that's been popping up too on the UOA, which is Denison, and the other one is can't remember, but that was the one that I remembered. So that's CCJ. What else? Cool. What did you find?
I found Uber. Some calls in Uber. Yeah.
Uber.
I think they just lost in the UK, and
yeah,
there might be other governments coming after them. Yeah.
So the whole gig thing and how and basically the government also, the U.S. government is forcing them to maybe they're not full employees, but they're not allowed. They actually are forcing the drivers to pay their taxes. So you have a lot of drivers that just might say, all right, this is not even worth it anymore. If I was able to do that and sort of get by on some of the taxes, maybe it's not worth it for them. I'm not sure. But Uber, sorry, I will forever say Uber. The May, what are we looking at? The May 20,
May 60s, yeah.
So the 60s, I think these were bought, the May 60 calls. I think they were bought in just over the recent last couple of weeks. Something strikes a bell. I'd have to go look back on that because I'm not sure. We're trying to be confident on whether or not these 25,000 are buying to open as opposed to buying to close. But if they are buying, looks like the vol's up a little bit. So we got 54. These traded 1040 on the offer. 54, 55. Yeah, it looks like these were a buy, but at the same time they were buying it. The stock was trading off this morning with the market. It looks like, you might just have someone. I'd have to check on this 60s to 65s. There's a lot of interest here, open interest, and it didn't say it was a spread. It looks like a buy, but it wasn't really putting upward pressure on the stock, or maybe it was just holding it for the morning. So it happened right around, call it right around here while the market was trading lower. Yeah. I'm not convinced that this is a buy because the guy thinks, let's just frame it a little bit. Looking at the technicals. So the 50-day moving average is right here, 56.16 on a gap move lower. So one thing that I do see is, one, to me, this is 48's a big level. You have sort of this movement here. But what I see is, let's take out that. What I see is sort of this, and this, and makes me a little bit nervous. A little bit of head and shoulders. And if you go back, it could be one of those diamonds like a Tesla. It's setting up here. It's not the most bullish chart, to be honest.
Okay.
So I'm concerned that you get a move back. Symmetry would say that you get a move back. This did it twice here. At 52, 53, break to 48, and then it shouldn't break that. If it does, you're looking, in the high 30s. The market would have to sell off with the, interest rates would have to be going up. The market would have to sell off. I think Uber paid its taxes over the course of, I mean that figuratively. It did a lot of work for a long time while the market was screaming. This, did not. This was a year where it did nothing while everything was going up. The election came. It was good news with the prop in California, Proposition California, and now it's been trading up here. I could see why people are taking a stab at $60. They're looking comparatively to other names and the technology, autonomous driving, a lot of different things going on within Uber that, 60, you got drones in there too. And you don't hear a lot about drones, but I think drones might be the next, big trend, call it in the next 12 months, where, Amazon, you actually see drones dropping stuff in front of your porch, and that might be interesting. So this I could see the 60s being bought. If it does, what's the price? Let's just take a look at the target stock price here. We need something like a 73 or something like that. 73. Yep. So 73 for the 60s. So 73. Uber 48. Let's just call it right here. 46 to 64 is how much? 18. 18 plus.
Yeah, 72.
That gives me 18 plus this is a lot higher. But we're probably looking at the midsection here, because if you're looking at, we're kind of looking at this. Let's do it again. It's the same thing. We're looking at this, like it started here. If this is the middle and you have this sort of, I'm being creative here, it's sort of like this diamond, they like doing this diamond thing. So it goes up, down, creates this diamond. Very, very similar to Tesla, that 55 plus the height of it, 1873. That's where you would get 73. If this truly is this, diamond up and down type of thing. Yeah, I'm acting like a little kid here, playing a game, but it sort of looks like a quasi diamond. I'm gonna erase that. That's a disaster. But I would say 18. I would say, can it get to 73? From where it is, 18 here to here. I think it's pushing it. I think it would need something, but it has earnings. I wouldn't. It's not speaking to me. I would say that it's not speaking to me the way I would like to speak. I guess that's why I'm struggling here, because I don't see it. I don't see it as much as I would like to see it. I'd like to see the news more positive. I'd like to see the stock not floating around and then trading down 5% and people buying calls. I'd like to see sort of, I don't mind seeing the stock longer term is pretty good, but give me a pullback down to 40 and then let me see call buying. And that's what I'm thinking. Okay, now they're thinking this is good. So I'm a little skeptical about the Uber there.
Okay, fair enough. All right. I like it. All right. You want to take a question?
Go ahead. What do you got?
Yeah, I think this is maybe one that a lot of people have. So here it is.
Go ahead.
If the call option strike price is too expensive, is it worth dropping down a strike?
If the call option strike price is too expensive, if the call option premium for a high strike, so if the call option strike price is too expensive, is it worth dropping down a strike? I'm not sure what that means. I'm not sure what that means.
It's probably
If
going up, not dropping down, I guess.
if the call option strike price, which means the premium, so some strike price, that premium is too expensive. I don't know what you. I don't want to assume that we're using the term expensive in the
Mhm.
right way. So if it's too expensive, just because it costs $5, that doesn't mean it's expensive. Is it worth dropping down a strike? The
I think
down
it's
strike
going
is
up
going to
when it
be.
calls, right?
It's going. It's. I'm a little confused. Is there another question? I'll let Dean
Okay.
try to rephrase that question. If my normal plan is to sell at a 50% loss, okay, or 150% gain, okay, should I follow that same plan with SPY spreads, or just do I, or just I do, or do I just do something different for spreads? I would say you're going to follow the same plan. Okay, you're going to try to follow the same plan. What we're doing with the SPY spreads, the reason why we have used them in the last couple of weeks was simply because um, the I, I don't see a crash right now. I see down 5 to 10% could happen. I'm not sure I see a crash. Okay. So the fact that when I don't see a crash, I'm more willing to play the put spreads. That's one. Two, I wanted to, because the downside puts were valued, because we had just gone from down to 272 and it shot straight back up, the market prices those 272s as a real possibility of getting there again. And they're willing to pay for those 372s and 375s and anything that was down there, they want to pay because it just got there. And so and what I mean by that is skew. Skew is high, and I'm looking at it and I'm saying, okay, I'm not. If the market does get there, I don't think it's going to break through and crash. And so I will feed the ducks when they're quacking. You feed them,
Mhm.
and they want to buy those puts. Fine. I want to do a put spread. I want to buy puts outright, but I will just do the put spread and do this put spread at this, and I can get decent leverage in a short period of time that I need to protect, one put spread by protect 3, 4, 5 positions. So I would keep it the same. I would keep the thought process the same. You're still trying to stop at around 50%, and still and look, it got to like 190 this put spread in the last couple of days. But it's there to protect you in case this thing is bad today and it goes down to 382, and that put spread is going to be worth a good chunk more than what you paid for, and you'll probably make your 150%. In the same notion, if it starts doing that, a lot of the stocks will be off, and so you're actively trying to make sure you're watching your stops there. But the idea is that we're leaning a little bit long, and things are moving in the right direction if we can get through 400. But I can tell you that if we do break 398, 400, 402, 403, I'm going to be in there rolling up those puts. Or if you're stopped out, I also want you to be aware that you could do it on your own. You don't necessarily need me to tell you this is the time. If you feel like 400, 402, I'm just simply trying to make sure that if this thing gets stopped, I might go a day or 2 days without it, because it's not going to really help anyway. If that's at a point of being stopped, it's likely not to help us anyway, unless you crash on that day. So I will take 1 or 2 days to watch, and then if I get an extra move, I'm going to roll it up if you have it, or I'm going to tell you move up that level. You could trade. I know people ask me, you could trade Qs, you could trade a number of things. I generally like to use the overall market because we have names in a lot of different spaces with a lot of different
Mhm.
things. And I get a cheap cost, because cheap relative to Qs, although I'm using the word cheap. I get a lower price on the puts because Qs are going to be priced they have a higher volatility because they're the Qs, and it's just technology. So these are things I think about. I would say keep it the same, treat it like another position. Just understand that behind that position, I have put in a lot of thought and a lot of portfolio analysis to say, it's likely we're long, 7 positions. 3 are likely not to get stopped on a 5% move down. Okay. So that means 4 I'm really worried about. How do I protect those 4? And how do I match up something that could give me the duration correction correctly with those 4? So there is a lot of thought. I'm not just picking out of the wind. Oh, I'm just going to do this. I've
Mhm.
shown on the podcast how I do the open interest, how I look at things there, and I'm telling you also about duration here and how many positions I need to protect, and how I'm going to do that with one trade. Right. So if I have 5 positions, I haven't done this in a while, but I might just do 1 week. We're going to do 1 week puts because I want to watch 1 week. That's all I want right now. And then let the market does what it's going to do for 1 week. But I know that if I hit that 1 week, I'm going to be save the whole portfolio of 6, 7 names. So if we get to 402 and it's Tuesday, I might say let's buy the 1 week puts at 400 because if this thing does turn, then so I haven't done that in a while, but I will do that. I will turn it around quickly if I need to. And by what I mean quickly, I'll give you the 1 week as a placeholder. We might lose, we might win, but I want it there. And we did that last February, right? We did that. I did a 2 week option there, and I said, this is right before coronavirus. There wasn't enough time to think. It was, you're seeing things move, everything's turning, and there it went. I said, just buy this one, get in there. And then on Monday, we came in and bought more puts and said, get in there again. So, I'm willing to turn it around very, very quickly. Right now, I just need something that's going to hold the fort down in case we turn, and we don't want to have too many ABBVs. That'll be a disaster. So look, this is the game. We're doing the best at the probabilities and putting things in place for called a swing trade, but a few months. We're trying to gradually position the book to be. Right now, we're a little positive. But we're long stocks that have had big drops, or we're long value names, or we're long names that I love, like GM, that I think is going to unlock that value at some point somehow. And that leads me to another one today. Look, UPS is having trouble, right? It's a name that we're long. I like UPS. I like it a lot. But I like it in call options because I think if it works, they're going to really move it. But here's something to look at. Here's something that I think, let's just take a look at FedEx for a second. So you have FedEx earnings coming out on Thursday afternoon, right? So you have FedEx earnings coming out on Thursday afternoon. Let's see the chart here in FedEx. I just want to show you, ways to think about things on your own and to think, this actually looks like good risk reward. Okay, so FedEx, you see the chart. Great chart here. It's consolidating for several months, and here's a chart in FedEx, right? Great chart, consolidating. This is all bullish. It's all good. You don't just get a stock to go from 110 to 300 in 6 months, and it's not going to do this for a while. So it's all good. It's all good. People are just, getting out here a little bit. People have made all this money. And now we're at earnings. The stock was trading 272 3 days ago. This morning, it started traded 257, 258. You have earnings on Thursday. Okay. Now, FedEx options will be priced in for earnings. So you're going to have this March. You're going to see something going on with the tool today. It's not pricing in my options prices, but I'll take a look at that. So we have this, and we have it priced for earnings. So you see $5, $6 and whatnot. It seems like a lot. It was 72 just 2 days ago, 3 days ago. So they are pricing the 270s at $5, $6. But what I told you, the other day was, UPS and FedEx trade, almost in sync sometimes. You see the same thing in UPS. Look, if everything's going great for these types of these logistics names, you could see one would trade similar to the other. So this had a big move, and it's digesting this move nicely, even tighter here. Okay, so 155. Today it traded 158 and a half, 150. What was it? 150. So 159 and a half. And you still got, the market sometimes forgets, that you got FedEx earnings on Thursday. So UPS March 160s, these are $2. They got down to $1.50 or so, $1.60. That might not be a bad trade. I'm not saying to do it. I'm not trying to tell anybody to get it, but I'm telling you that UPS was just trading 167 the other day. FedEx started trading lower. FedEx announced today. I have no idea what FedEx is going to say. I have, no idea how the stock's going to react after earnings. But what I'm saying to you is that because they're trading in sync, there is then an opportunity to say great risk reward without knowing where UPS is going to be or where FedEx is going to be. Great risk reward is saying, you know what, on this move, let's go even further. Here, let's go. Move it all the way up here. Give me the 30-minute bars. So on this move down here, it was trading 68.5 3 days ago. On this move, sharp move down here, down to 160, 159.5. FedEx is doing the same thing. I can buy the 160 calls for $1.50, $1.75, maybe take a small shot of 2. Hopefully it does it again, before, this afternoon, or, if it hits there, these 160s become a cheap bet on the FedEx earnings on Thursday, where you have a stock that literally was 168. So something to think about. That's what I consider great risk reward. That's what we're looking for, right? We don't know. I'm not a believer that anybody knows where things are going in the short term. Okay. It's a very heads or tails type of game to play. But when I see good risk reward, I think that's great risk reward. You get to really see FedEx earnings, which is going to affect UPS earnings. What if it's Blockbuster and UPS they're just saying positive things about the industry, and UPS trades up 4 or 5%? The stock's going to trade 168 again. That 175, 180, $2 turns into a $6, $7 trade. Right. It's not bad for a 1 week. You are getting an event there. So something like that, I think, is really important. Go ahead. You have a question?
I love it. You want to redo that question?
Which one?
Dean's question.
Oh, he did it again?
Yes, he did. Okay, here it is.
So say a premium is 460 at the 150 strike for a long call. Is it worth going to the 155 strike for 230? Perfect. Okay. So, Dean, great question. What matters is, and this is how you should look at the new options chain, because 460 is how much? 460 and 230, you said? 460 and 250? 460, you can't look at price and say 460 and 250, one is more expensive than the other. You can't use that term expensive. One costs more than the other, but it's not expensive. When you say something is expensive, you say, okay, I want to sell that versus buy the cheap one. You can't do that with options because it's a derivative and it's being taken from something else and there's probabilities involved. You can't do it. The best way to explain that is if I told you that if I told you that I can get you 35 to 1 odds on some bet, and you would say, that sounds awesome. What's the stock? And I say, oh, it's not really a stock. We're just going to go to Las Vegas and you can go on any roulette table and throw it down on your birthday and you get 35 to 1. And then you're going to say, I don't want to play. That's stupid. I don't want to play. But that's the same thing as saying, I want to trade it. I want to trade the 231, not the 450, because the 230 costs less. There's odds involved underneath the hood, the probabilities. And so 35 to 1 sounds good until I say Las Vegas roulette. And then you say that's garbage. So then I show you something in a stock and I say, oh, you can get 3 to 1 on this option. In the UPS, I just showed you, you can get 3 to 1 on the UPS trade. And you might start thinking that sounds pretty good. 3 to 1 in that scenario is good. 35 to 1 in Las Vegas is no good. And so you can't just go by the price. So that's why that is the whole point of Options Geek. It's this analysis. It's that question that is behind all the confusion that everyone has. 99.9% of the people using options, including every online options guru that's out there. Just ask them that question and they will have a hard time sort of telling you which one is the better one. And it's because what I've built is brand new education. So at 3 steps to profit, we're changing the mindset to say, this is how you look at it. Cheap versus expensive doesn't mean one price versus the other price. It's the wrong way to look at it. It's the wrong way to look at it.
Mm-hmm, mm-hmm.
Okay. So yeah. Dean, that's if you need more, I think, Dean, that you have the 3 steps. So if you need more clarification, you can email me. I'll let you email me on that question.
Okay, great.
But you got to have 3 steps. Otherwise I'm booked.
Yeah.
I can't. Okay.
Okay.
Go ahead.
So we got 10
minutes. We're going to leave you before now.
Yeah. So why don't you say some final thoughts, what you're thinking? We got a lot more new people, and then we can call it and let the people watch Powell.
My final thoughts are, if you're new, I'm not a wizard. I'm not a wizard. I don't know where the stocks are going up or down, how they're going. But what we do here is, and our audience can attest, is we're looking for good risk reward. Okay, we're looking to find good risk reward. We're looking to do some homework on the transcripts and whatnot. And it's important. I gave you, yesterday, I think some of these videos I put out, you have no idea how valuable they are. I don't give this information away for free generally. You can send Marco an email. This stuff doesn't come for free. There's nobody on the internet teaching you what I'm teaching you. Okay, no one. Okay, not for free. Okay. And this stuff is extraordinarily valuable. The little nuances that I think everybody can learn from. So what I would say is start with education, start really understanding the fundamentals of options. We don't look at implied volatility in a major way. We're not trading the Greeks. And I'm telling you as a top expert that the best guys in the world, they're not doing that either. They're playing a game of risk reward. That's what we're playing. They're playing, where is the stock going? And then once I know where the stock is going, which option do I choose to make the best bet on that position? That's important. That's what we need to figure out. And as a group, as we get this podcast growing, I want people to be smarter and better. And the questions will get better. So the more questions we have, great. But those questions are going to get smarter. And the people on this podcast who've been watching for 3 months, they are much smarter already for it. Okay. And they will tell you there. I'll allow you to tell them what you've been doing, because at the end of the day, I would like people to add to the conversation. We're talking about skills, and people are telling me, oh, it's going to 40, and they beat me up on it. And I said, okay, that's fine. I might be completely wrong. I admit it. But I'm telling you that a big guy is buying these, and he's spending a lot of money doing it. And this is the way I see it. And this may be the reason why. So it's a little bit of second thought. And it comes out that they're doing a secondary offering today. I mean, is that coincidence? Okay, whatever you want to call it, fine. I don't believe in coincidence in this world when there are people that are writing the documents, there are people that are faxing the documents, there are people that are reading the documents and editing the documents. You got a whole line of people that know there's a secondary offering coming out in skills. So that there's 15,000 contracts trade in the period of 2 days, that there's never been 15,000 contracts in skills trading, it's something to look at. It is valuable. Don't let anybody ever tell you that the UOA, unusual options activity, is not valuable. It's not valuable because they may not know exactly what they're looking for. So here, what we are doing is I'm trying to take my experience dealing with these guys and telling you this is likely what they're thinking. This is why. And when it matches up, it works perfectly. When it doesn't, we got our stops and we got our plan to figure everything out. So on that, I'm going to let everybody go to I'm going to do the Las Vegas, since we talked about Las Vegas. What happens at, when you're playing craps, or the roulette, what does the guy do? No more bets. No more bets. So we'll leave it at that. All right, guys.
All right. Perfect. Thank you, Felix. Thanks,
everybody. All right. Be careful out there.
Yep.